All right. Good morning, ladies and gentlemen. Good morning and welcome to the education room. It's 9 o'clock right now. We just got things going. I am going to give it a second. We're going to let some people roll in. Hey, good morning, Daniel. Nice to see you. Guys, my name is Mark Novak. I'm going to be walking you through the education process today. First hour of every day is very similar to the day before. We spend an awful lot of time talking about rules. We're going to talk about patterns that are going to help you be successful. We're going to talk about chart reading. And what we're really going to do is we're going to just put a plan before you. We're going to give you a set of rules. If you're brand new, if you're coming back, if you're looking to be consistent again, we're going to talk about those rules. We're going to discuss what it looks like to have them met. And we're going to talk about the advantages provided. This classroom is very much a two-way street. It is not a lecture. It's important that you understand that. I'll do my best to keep things moving, but I rely on y'all's input. I rely on you guys posting pictures in the class, asking questions, raising your hand, looking for a little clarity on the concepts that you're struggling with. And that's really what makes this class unique, what really makes this class amazing. 15 hours every week, Monday through Friday. Really, my goal is to look at what you're doing, to talk about the rules that you've put in place for yourself, and discuss how well you're following them, discuss how you may be able to follow them better. And then really one of the things that I like to do is I begin to recognize patterns in you guys as the trader. Some people have a certain rule that they may fight a little bit. Some people may struggle with entries. Some people may struggle with exits. And each and every one of those concepts is fair game. Put it on the table. Let's look at it, and let's get you where you want to be, where you said that you wanted to be, to that point where you can stop that four-letter word, WORK, um, trade from home, be done by 9 or 10 in the morning, go play golf, go fishing, go skiing, go do whatever it is that makes you happy, because you have an established set of rules and a plan that has been proven time and time again. Um, Before we do anything, and I do this every day, I like to go to Forex Factory. You're showing only crude today, Wednesday the 25th. I've got each selected. I've got the US dollar. Are you looking on a different? Here, watch this. I'll do everything, and I'll apply that filter. That's Canadian, Ron. A at 10 a.m. So I'm watching those US ones. So I'm going to select none and make sure that all I'm doing is a US. Yeah, I need you to be Canadian today, Ron. Need more coffee. Me too. I think that's Australia. Good day. We're good. As each and every morning, and just like Ron said, Ron pointed out that there was some red box of some high impact news going on in Canada. If you're trading Canadian markets, that could be a market mover. That could knock you out of a position, make the market move erratic. Today here in the good old USA, we're looking at crude oil inventories at 10:30 a.m. Since I would say 9 out of 10 of the Nexgen users are trading crude oil, or at least watching crude oil, even though this has a low impact indication, this can be a market mover. At 10:30 a.m., they're going to talk about the barrels that are left over, and I'm not really worried, or the barrels in reserve, and I'm not so concerned about those barrels as much as I'm concerned that somebody else with an awful lot of money may be concerned and may make that market move a little bit. Tomorrow, there's one of those red impacts, and these are really what we're looking out for. High impacts, medium impacts, and then being aware when the low impacts come in. And just that little bit of awareness keeps you out of the path of an oncoming train, so to speak. Next, I'm going to go to the education page, guys, and there's two places on this page where you can get pretty much any answer that you need. The first one is going to be the software user guide. And I'm going to click on that software user guide and have it come up. And there are really all of your questions with NinjaTrader can be answered from this page. Making sure that you can open, close, scaling charts, adding stops and targets, building new charts, applying templates. It's really your NinjaTrader how-to. And then the most important thing for new students to recognize from this one is how to use your screen capture program. How to make sure that you're comfortable grabbing hold of a picture, sharing it in class, because guys, this is how you and I have a conversation. If I pull up my charts and I have my capture software, I'm going to click that big red button. If I hover over one chart, it's going to give me one chart. So I'm going to use it as a click and drag tool. I'm going to left click that mouse and drag it all the way down to the right. And when I release, it's going to give me the option to take a photo. Guys, grabbing a picture of your charts is really this easy. Once you have the photo, you can use the different tools. You have an arrow, there's a shape, and then this call out button is how you and I are going to have a conversation. You'll be able to write your rules on the chart. You'll be able to write why you got in, why you got out, where you got in. And if you give me a little synopsis of what your brain is thinking as you get in and out, hopefully your brain's just thinking, my rules were met, it was time to get in. You and I will have a great conversation. I'll be able to give you the best feedback possible. And ultimately, we're going to get you where you want to be. To share it in the room, there's two things you can do. You can click this copy button, and it's going to put that on your clipboard. Come to the room. If you're in pop-out mode, Control-V will put that link in the room, and if I hit enter, there it is for you guys. The other way is to upload it to Screencast, and when you click upload to Screencast, it's actually going to put that picture into a cloud on the Screencast server. I can copy that address, and then I can simply, once again, paste it in the room. And this is how we're going to get the best feedback to you. When you present these pictures, when you show me what it is that you're thinking, what it is that you're looking at, why you're doing what you're doing, I'm going to look at it, I'm going to read your charts, I'm going to look at what your indicators were saying, and then we're going to have a great conversation about it. And here's just a little reminder how to annotate those charts for the best results, giving me your rules, giving me what you see, and then telling me how you felt. Were you nervous? Were you anxious? Were you excited? Were you confident? Because the way you feel going into a trade says an awful lot about your ability to follow the rules. I've recognized that in my own trading. So that's off the education page. This is our software user guide. And then the other, I'm going to give the tour on Discord first, guys. Everybody in here is on Discord, obviously. So I'm going to go through a little tour for you on Discord. First one I'm going to look at, under the educational outline, literally anything and everything that you need to use the software. There's a self-training guide that's going to walk you through A to Z. It's going to put you on a path. It is foundational. It grows from a point and expands. We have user guides. The same software user guide we just looked at, and then the tutorial version on the main page. Trading rules for a high probability trend trade, which is going to be our first focus. There's a couple other trades beyond there. Sections on chart reading. There's example trades that were taken from the users room. Nexgen users with enough, absolutely Claire, with enough experience combined, probably well over 100 years. And these guys are doing trades on different looks, different styles, so you can go in and look at that. There's a section for you to ask questions, if there's anything that we can do for you there. And then finally, the Nexgen member area, the traders chat. You'll notice that people are posting throughout the day. They're sharing ideas, they're posting their trades, they're talking about what they see, what they don't see, what they're doing, why they're doing it. It becomes a fantastic educational approach. So explore Discord, and if you have a question, talk to your salesperson, talk to me. We'll find you the answers, get you what you need. And then Claire wants to know, how do I put a picture in the spreadsheet? I love that you asked that. First thing we're going to do, Claire, are you on Capture or Snagit? This is my Snagit. I can capture that picture. That's the first step, is just getting a picture that you want to put in there. The second step is having your spreadsheet ready. Guys, if you're a brand new user, your 90-day spreadsheet is going to be in your Nexgen Study Picks folder. If you've been with us for a while and you're ready to really commit to that path, if you go to the tutorial section, there is the trade tracking sheet. You're on Capture, Claire? I've got you. You can download a copy of the spreadsheet right here, and this spreadsheet becomes vital for tracking your trades, for looking at what you're doing. So what we're going to do, Claire, let me use Capture just so that we're consistent on everything that you need to do. I'm going to pull up my charts once again. I'm going to click that Capture button, and we'll just get one chart real quick. I've got it, and the first thing I'm going to do is I'm going to upload. And when I upload, it gives me the screencast link. I know you're good at that because you've posted in the room many times. I'm going to copy that link, and it's going to put it on my clipboard, and it's going to stay on my clipboard until I copy something else. Hey, Buck Blue, nice to have you. Good test. Luciano, nice to see you. So Claire, if this were a trade that you had taken, there's two ways to do it. Initially, you're just going to paste that screencast link into there, and this is going to get you a link, but we want it to say what's going on. And if you identify each trade, rules met, rules broken, winner, loser, you can go back and make study a little easier. So I'm going to go Insert up here in the top left-hand corner, and I'm going to click on this link button. And this link button is going to let me create a hyperlink. I'll paste that screencast address in the address bar, just like you're going to Google or eBay, nexgen-t3.com. And under text to display, this is where you're going to put rules met, winner, or you might put into term condition, loser. But you identify what's happening in the picture, click OK, and it gives you that hyperlink right in the spreadsheet. You can put these on the trade tracking sheet. You can begin to fill your favorite looks with everything. You can start working on your management plans going through. But the more you use the spreadsheet, guys, the more pictures you put in here, the more you're tracking your trades, the more you're going to begin to recognize an awful lot of patterns, not only in the market, but also in yourself. You're very welcome, Claire. And we'll talk about the spreadsheet a little bit more, but get in the habit of filling this thing up. Now I'm going to go back to the tutorial section. Guys, off of the main page, indicators, tutorials, click here to start learning. This is everything. All those things that I just showed you in Discord are right here in the website as well, so you've got a couple places to look for it. And everything that we do in the very beginning of Classroom focuses on this trade right here. Luciano, 3 weeks away in Europe. I don't feel bad for you, but it is nice to have you back in class. First 30 days and beyond, guys. Our focus, and this is what we're going to focus on in the beginning of class. We're going to look at a high probability trend trade. We're going to discuss in detail the rules associated. Because a high probability trend trade is when each indicator on every chart agrees with the rules for the trade. Typically, this is when all the triggers are their strongest, no termination conditions exist, and there's no trouble spots between you and your entry and your target. So this is going to be our first focus, 30 days and beyond, consistent winning trades, high probability trend trades. Guys, this is a trade that has been proven through back testing, live trading, everything, typically wins between 70 to 80%. I like to say that number because it keeps it low. Most of the Nexgen users that have focused on the high probability trend trade for a week, for 2 weeks, just to kind of get that momentum going, show me results in the 90% range. So this is going to be our focus for the first 30 days, for the first 30 minutes of class. Because when you focus on that high probability trend trade, when you build that great foundation with such a strong methodology, you're going to learn to read your indicators. You're going to learn to read your charts. And 90% of what we do is chart reading. 10% of what we do is going to be taking the advantages provided from our chart reading and turning it into that high probability trend trade. Because you will, in the next 5 to 7 days of study, of asking questions, you're going to be able to open your workspace, look at your indicators, and decide and define where the market is likely to continue. And you're going to be able to use that continuation point as an area for entry for this high probability trend trade. You'll be able to understand where the market is likely to go as you learn to read those indicators. This helps you pick your profit targets. And you're going to be able to understand where the market is likely to stop. You will be able to visually see where that trend has the potential to end and keep yourself safe by not trading into a brick wall of support or resistance, hoping that a trend continues, because your chart reading is going to allow you to recognize that it hasn't or that it may not. So guys, we're going to keep it very, very simple. You'll notice that the trend trade rules are only 3 rules. We're going to take those 3 rules and we're going to execute initially on 2 charts. The first chart that you'll look at is a 13.2. You're going to use the most current bar on a 13.2, and you'll be able to determine 3 things in regards to a high probability trend trade. You'll be able to understand the overall trend of the market. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend, and should only be looking for rules met, trading in the direction of the trend. Rule number 1 for a high probability trend trade says that we have to have strong triggers. This will happen on the 13.2. And rule number 2 says don't trade into areas likely to stop the market, no termination conditions. Both rules 1 and 2 of 3 are met on this larger chart. It's like a broad stroke of a brush, and it's really giving you the overall temperature of the market. When your first 2 rules are met, this is when you're going to turn your attention to a 5-1 chart. And this 5-1 chart is a smaller, faster chart. You're going to be able to refine that broad stroke of a brush, and you're going to pinpoint your area where the market is likely to continue. Remember, that's where we're going to find our entries for the high probability trend trade, and that's rule number 3. Your chart reading will be able to pinpoint with such accuracy where that market is likely to continue that you'll use a limit order. You'll wait for the market to come to you to buy or sell a pullback at one of those key Fibonacci areas inside of favorable large triggers. And by doing so, you're going to be able to reduce your risk and maximize your profit potential. So in the beginning, simplicity is your friend. A very, very focused plan that provides advantages. And that's how I think of rules. 3 rules, and I've kind of paraphrased, make them easy to write on your chart. The first rule is strong triggers, and that's going to provide you the advantage of momentum. The second rule is no termination conditions. Remember on the 13.2, that's going to provide you the advantage of a clear path. And finally, by using that limit order to buy or sell a pullback in an area inside of those favorable large triggers, you're going to give yourself the advantage of an entry where the market is likely to continue. So 3 rules, 2 charts, 3 very distinct advantages in your corner as you go into it. And remember that this is a trade that typically wins 70 to 80% of the time. And that's why you focus on it in the beginning, to get that memory of success, build some confidence, and then work your way into what we call a medium probability trade. When you've developed the ability to read your charts, to understand your indicators, your whole trading plan is going to expand. And a medium probability trade is going to be defined as when most indicators line up for a trade. However, a small issue exists. Your chart reading is going to identify that small issue. And when you're executing these medium probability trades, you're going to take the trades and manage them assertively. Once again, your ability to read your charts will allow you to manage them assertively. If there's trouble in your way, you'll be able to identify it. You'll be able to exit a portion, get to a 0 loss level, And this is where you really take advantage of being able to read those indicators and everything that the software really has to give. But it starts with that very simple plan. 30 days focusing on a high probability trend trade. So I'm going to break down the rules. 3 simple rules. We're going to get them visually. We're going to talk about what they mean. We're going to talk about identifying them. And then the rest of the day is going to be focused on live market, reading the indicators, taking the information. We are going to focus on writing a plan, um, putting pencil to paper, identifying exactly what it's going to take to get you into the market. And really, we're going to start working on a plan to get you out of the market, because any trade that you enter, it has to end eventually. We're going to talk about a smart approach to doing that. But we're going to start off with rule number 1. Rule number 1 says that I must have strong triggers, because when I do, it provides me the advantage of momentum. So in an uptrend on my 13.2, your strong trigger look. Small triggers are up, they're above the large trigger lines. The large trigger lines will be widening, they'll be in the direction of the trend, and it's this space created between the large and small that lets me know that the odds are favorable for the market to continue in the direction of the trend. Same thing going down, red background. I know I'm looking for rules to be met for a high probability trend trade short. Small triggers break below, accelerate away from those large triggers, which are widening in the direction of the trend. That space created between the two lets me know that the odds are favorable for the market to continue down. And if you spend 30 days focusing on this advantage of momentum, it's going to keep you from taking trades when those large triggers are weakened, when the small triggers work their way inside of the large, because when they do, anything can happen up or down. So visually, in an uptrend, you're going to recognize where the smalls break away until they return, and then look for opportunities within that range. You see it in an uptrend. You also see it in a downtrend. Small triggers break away. Space is created right up until they reach. And you'll notice on a large chart, on your 13.2 chart, when there is odds favorable momentum, very often you're going to see these tails or these wicks. These circles on these tails or wicks represent potential high probability trend trades on that smaller, faster chart. So rule number 1 gives me the advantage of momentum. Rule number 2, guys, rule number 2 says don't trade into a termination condition. And a termination condition is a Fibonacci-based indicator. Whoops, sorry, accidentally blew that up on the wrong screen. It's a Fibonacci-based indicator. Sorry, little shuffle here, my bad. That may reverse the market. And notice that the word may is in there. It may reverse the market. Sometimes areas are going to break. But since it may reverse the market, it gives away the advantage of that clear path. Hey, good morning, Joe. Got your messages loud and clear. And these termination conditions are the Fibonacci-based indicator, and we recognize them through a comparison of the area and the T3 trigger lines. The areas that can terminate the market on that 13.2, blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, a cyan divergence low line, a magenta divergence high line. It could also be a large chart midband, and we'll talk about looking at that today, that gap theory that lets us identify a large chart midband as a potential termination condition. And then finally, there's one more. There's this any third divergence in the same area. And there's going to be a little different approach to recognizing it. So what we're going to do first is learn how to identify the areas that may stop the market. And it's a pretty simple process. And I'm going to come right from the manual here. The first thing that must happen is price reaches an area. You can see that my price bars have come down to support. They've reached that area. So the first half of the equation is done. When price reaches an area, a simple question to ask yourself, where are the T3 trigger lines? If price reaches Fibonacci support, all trigger lines remain above the support, don't take any more trades on the small charts. Rule number 2 hasn't been met. We've reached a termination condition. The rules say let an area break before continuing to take trades in the trend direction with strong triggers. So when an area breaks, this area of support, guys, is anyone having trouble seeing my charts? Anyone else? Gary, this may be the same thing as yesterday. You might need to go through and re-click, take a look. Paul, you're seeing them? And I don't think we've hit capacity yet. Gary, we may have if you just came into the room. Guys, if you walk in and you're good, okay, you guys can see it here, perfect. If you ever walk into this room and you're like, I just can't see them, capacity full, you get that little message that nobody wants to get, head on over to YouTube, and it's going to help you out. You can watch the live stream. You can still post in Classroom, still get that feedback. So termination conditions, once again, price reached, triggers remain above. This is an area that may reverse the market, so no more short trades. When is an area broken? When both the small and the large break through support, we consider that area to be broken, and that broken area of support begins to act as resistance, and vice versa. When we break an area of resistance, when all of the trigger lines get to the other side, that's when that area of resistance will begin to act as support. You see a lot of instances of this. Price reaches an area of resistance, absolutely no trigger lines go through. Guys, no more long trades on a small chart because we've reached an area that may reverse the market. As it pushes all the way back down to this area of support, two things happen. First, none of the trigger lines break through that area of support. So it lets me know that support has the potential to hold. Support becomes a termination condition. But the second thing that you're going to notice is the large triggers don't follow as price accelerates away. And those large triggers remain a full bar away as the Fibonacci area is reached. And guys, this is how you're going to identify not only Fibonacci, but also mid-bands as a termination condition. And this is a gap theory, and this is going to help you identify areas likely to stop the market. When price accelerates away from synthetic triggers too fast and too far into an area, it will typically snap back to those large triggers. So if you look at here, price accelerates away from these large triggers, the large triggers don't follow, and price snaps back. And this acts as a vacuum. And short trades taken within that snapback range rarely work out. So we can't go long, we can't go short. 90% of what we do is reading our indicators, waiting for the advantage. Ultimately, this market pushed back up to resistance, to a divergence high and another area of resistance. Each of the trigger lines remain below the area. This is what we call a pivot stop out. We have a pivot with divergence. The market exceeds and then changes direction. And these pivot stop outs that come from key Fibonacci areas are very powerful termination conditions. Financial suicide to go long into this position. And when this termination condition creates a full reversal with odds favorable momentum, we call this a strong top. This is the best of the best look. And when you go to that first 30 days and you focus on those high probability trend trades that happen after a termination condition on the 13-2, this gives you the highest chance for success. Absolutely. Joel, if you scroll up literally 3 inches on my screen, I just posted it in the room. Let me see if it's still on my clipboard. Nope. And it's never a bother, Joel. This is what we're here for. Let me get it again for you. There you go. And you'll be able to catch us live on that one, but you can still post in the room. You can still ask all your questions. So termination conditions that create a full reversal from resistance, we call this a strong top. Absolutely, Joel. And then the same thing coming down the other way. Price reaches these one-to-ones. The one-to-ones, none of the trigger lines break through. This becomes a termination condition. No more short trades. It creates a full reversal. It gives me odds favorable momentum. This is what we call a strong bottom. This is the precursor for the highest probability trend trade that you can take. And once again, there's one of those circles on the tails showing a potential entry for that long trade that reached resistance. So do me a favor, I'm going to ask. I know that I've got almost a full house here today. Odds favorable momentum is going to give me the advantage of a market that's likely to continue in the direction of the trend. Smalls above the large are wide, they're angled in the direction of the trade. Smalls below the large are wide, angled in the direction of the trade. And this momentum sets things in motion to look for termination conditions. Price reaches an area, none of the trigger lines break. No more short trades, guys. So rules 1 and 2 have already provided us the advantage of momentum and the advantage of a clear path. Sometimes you're going to witness a change on the 13-2, perhaps a pivot that didn't reach a key area, a market that appears to turn even with odds favorable momentum. And our final termination condition is going to help you identify this change happening by using your smaller, faster chart, by using that slowdown in momentum, that divergence. And 3 divergence in the same price range may terminate the trend. And this is a very powerful condition when the 3rd divergence happens with the small triggers inside of the large triggers. So what is divergence? When this negative number prints, when this cyan divergence line prints, or this magenta divergence line prints, it simply means that while price reached this point on your chart, the momentum isn't following. It indicates a slowdown in the market. 3 visual slowdowns through divergence may terminate a trend. When your small trigger lines go from odds favorable to anything can happen, it becomes even more powerful. And then when that 3rd divergence is higher than the 2nd, this is one of those head and shoulders patterns, it becomes even more powerful. And you'll also be able to use this not only to identify the change. Notice 3 from the bottom and 3 from the top is indicating change from the bottom and change from the top. You can also use this divergence to help you manage a trade. If you have odds favorable momentum and nothing in the way, and you're in a short trade, let's say you were just in from here, this visual change in the market, these 3 divergence, will allow you to recognize the slowdown, maybe exit this short trade with small profits, minimizing losses. Rather than holding and hoping for the next area, you can use your chart reading to really manage those medium probability trades or even manage those high probability trend trades. So if you guys will do me a favor, give me a Y in the room if you're with me. Strong trigger lines, no termination conditions on the 13-2 chart, making sure that you're giving yourself these advantages, because when you have them, this is my favorite part of trading, is getting into the market, right? Staying busy. Let's pinpoint that entry. Let's go through and let's figure out where that market is likely to continue. When the rules are met on the 13-2, this is your look on the 5-1. We're in an uptrend on the 13-2. I've got odds favorable momentum, and there's absolutely nothing in my way. So I'm going to turn my attention to the 5-1, and I'm going to focus on those 5-1 large triggers. And if they're up and strong, I'm going to look for areas falling within them. And an area can be Fibonacci support or resistance. It can be one of those mid bands, or it can be one-to-ones. This becomes my area to watch. It's not time to take a trade yet, because rule number 3 says that I'm going to buy a pullback. And a pullback is just a small retracement in price counter to the underlying trend. So I'm going to buy a pullback at an area inside of favorable large triggers. And a pullback begins with a reversal bar. On this smaller, faster chart, what's happening in one chart on your, or 1 bar on your 13.2 may happen in 20 or 30 bars on your 5.1. I'm identifying this reversal bar, and when it happens, I'm going to create a window of opportunity for entry. And that window of opportunity will go from the highest point of support to the lowest point of support inside of favorable large triggers. If it were a downtrend, it would be the lowest point of resistance to the highest point of resistance. And my job, because of the momentum, because there's nothing in the way, is when I identify my window from this mid-band all the way down to the 1-to-1s, I'm going to right-click. I'm going to activate a limit order, and I'm going to wait for the market to come to me to enter this trade in a long position to buy the market. I don't get to control the market. What I do get to control is whether or not my rules are followed. In this case, the market pulls back. That retracement is true. And I'm now in a long position at 79.21. My initial protective stop, because I've identified where the market is likely to continue, will go below that window where the market shouldn't go. And I will take this trade 1,000 out of 1,000 times. I'm obligated because this is a part of my plan. The high probability trend trade is exactly what I'm focused on for the first 30 days. And I know that I have the advantage of momentum, right? I have the advantage of those strong trigger lines. The market's likely to continue in the direction of the trend. I do have the advantage of nothing in the way. I have that clear path. And then finally, I've entered the market at the area where it's likely to continue. And guys, 70 to 80% of the time, this is going to be my result. The market is going to continue in the direction of the trend. I'm going to be able to reduce my risk below that pivot, and I'm going to have probably the best profit potential that I could get because I waited for the market to come back to these areas inside of favorable large triggers. These areas act as a wall, almost like a backstop, and then the market continues. So guys, 3 ways, 3 rules to get you into the market. 2 charts to make it happen. And then here's your study tool. If you scroll back through the markets, you can go through the historical data. Just simply scroll back, and every time you see those rules met, those strong triggers, those no termination conditions, and you see a tail, circle it. And if that tail lines up on the 5-1 inside of favorable large triggers, you know that you have rules met. You have a trade that typically wins 70 to 80% of the time. And then John just put the note in the room. If you do these perfect trend trades, something that wins 70 to 80% of the time is mathematically obligated to lose 30% of the time, right? If you take 100 trades, you're probably going to lose 30 of them. But that's okay because your winners are typically going to be 2 to 3 times more as your losers on average. And it's 70% winners, 80% winners, 90% winners, and that win-to-loss ratio, you're in a great position, and consistency is the key. When the rules are met, you take the trade. When the rules aren't met, you're simply sitting on your hands, waiting for those advantages, looking to get into the trade. So, guys, that is your high probability trend trade. I try to whittle that down to a little bit quicker in the morning. This is your S&P live. You'll notice that we've reached an area of support. Absolutely none of the trigger lines have broken through there. Does everybody see this as a termination condition? Support is reached. Trigger lines haven't made it through. And guys, look at that. Full reversal, odds favorable momentum. How many new people do we need to ask questions today? I don't know, Paul. I've probably got about 15 new people in the room. And they are more than welcome to ask all the questions they can think of. Some of you veterans will ask those same questions just to help the new people out, I know. But I'm definitely here to help. Termination condition creates a full reversal, gives me odds favorable momentum. Guys, this is the recipe. We're now looking at a potential bottom in the S&P. As the market moves up, small triggers remain below this area, but everything is up with strength. So we're just going to take a second and see what it wants to do. And I'm not sure if we've had the opportunity today for a high probability trend trade. Perhaps we have. If I scroll back and I find that odds favorable momentum, I find that breaking through the areas, I'm going to circle that tail. And then I'm going to come to my 5-1 chart. And I want to see, I'm going to get it, John. We're not at 60 yet. I want you guys to take a look at this. Smalls below the large have turned, they're rolling, everything says down. If you come to your 5-1, the market pulls right back to that midband, right inside of those favorable large triggers. If you were awake at 4:31 a.m. this morning, guys, you probably found this opportunity, and that entry at 4:14 really didn't even blink until 39.97. High probability, rules met, 100% trade, and this is going to be your focus for the first 30 days because it's going to have you meeting and understanding the advantages. Fibonacci is a key area. There's a fight that happens. Deep pockets investors know exactly where these are. Guys, we have the ability to take advantage of what they see through Nexgen, through Fibonacci, and put ourselves in a position to take advantage. And I'm going to go ahead. We are 57. I want to read this post that John put in the room this morning. Every now and then, somebody that's done it wrong likes to talk about how to do it right. And I think that most experienced traders have seen both sides of the coin. So guys, I'm going to read this out because I think this is a great message and it's something for you guys to think about. And it's a wonderful segue to my next little section here. John Novak posted at 7:49 this morning. He says, I've done this for 28 years total. Since he was 25 years old, everyone who trades what they think loses in the end. All caps. Everyone who follows a plan and doesn't mess it up too much wins. Same thing over and over for the last 28 years. That's been true. In the end, you must make a choice. Have fun and do what you think, or make money following rules. And it's a choice, and many choose fun versus rules when you must, and that's why you must use a checklist and stop messing around. I'm going to edit a little bit. Don't play. John gets the call from clients after years of fun, after years of doing it wrong. They lose enough money and time and become frustrated and ready to buckle down. Guys, I'm going to echo this sentiment because I have really spent a lot of time with people coming back into the game, people coming back to trade and saying to themselves, I'm going to do it right this time. I'm going to follow a path. I'm going to follow a plan. And this plan that we're going to talk about in just a minute is a result of one of these phone calls. John says, skip the years of pain. Follow a plan now because the plan does work. And I'm going to give you two checklists today. I'm going to give you the high probability trend trade checklist. Then I'm going to give you John Novak's personal checklist that he uses as well. Both are a plan. Both are solid. Both are very focused on following rules. And then you have no excuses, is what he says. You can either follow the plan or you can have some fun. It's up to you. I can tell you that following the plan and making money actually results in being fun. And then the second point that he makes this morning is don't test it with your money. Use theirs. Have you seen this? Let me go to the education page. Use theirs, guys. Apex has been great for new users learning to go live. You keep your first $25,000, 90% after that on a $100,000 account. It's the same as you putting up $90,000 of your own money, and you have about $200 at risk, and you can't beat it. John says, rule number one is other people's money. We'll give you all the analysis, guys. We'll give you all the rules. They'll give you the money. Your only job is to not mess it up and follow a checklist. And he says, come on, seriously. The choice is easy. Don't mess it up. And then he's done. He needs more coffee. Guys, think about that. What if you decided you wanted to be you wanted to be a day trader? and there was a company that provided you, and this is us, guys, provided you a solid set of rules, the best software in the industry. And now here's your example plan for the first 30 days. Guys, this is exactly the path to get you where you need to be. Joel, thanks for saying that. I did it wrong too. I did it very wrong in the beginning because we're so darn smart, right? And the faster you relinquish and give up. Guys, there's an example of how to start, of how to write your plan, how to put yourself on that path. And what you're going to notice, 10 km, I'll get you in just a second, and then we'll talk about that one. This is an example, right? You need to write your own plan. Take responsibility for it. I'll help you. You can email me your plan anytime you want. I'll review it. We'll talk about it. But this is the most conservative learn to read the indicators plan that I've ever seen in my life. And this came from one of those phone calls of somebody that was really looking to focus and buckle down. And they're one of the people that provided me the results, around 93% winners. Use the phrase my trade is. My trade is the high probability trend trade. This is a trade that typically wins 70 to 80% of the time. And in order to take this trade, I must have the conditions of this checklist met. And I've just simply stolen the checklist right here, guys, and I've written it directly into my plan. And once again, here's a copy of that very simple checklist, a copy of that high probability trend trade checklist. And I'm going to give you two. I'm going to give you one checklist that has this simple rules, and then I'm going to give you a second checklist, guys, and I'll open it up for you. Not only does it have the rules on it, but it actually has pictures of what each one of those rules means. So keep this one on your computer and put this one on your desktop and make sure that you're following that plan. And all you're doing is defining your entry. This is your entry point. Having odds favorable momentum, having no termination conditions, having an area of entry inside of favorable large triggers, and you must have the conditions met to enter the trade. It's a simple matter of they're met or they're not. You're going to take a lot of pictures. We talked about how to take them. We talked about how to put them in your spreadsheet. Every time you take a rules-based trade, it goes into your favorite looks on the spreadsheet, guys. I've got right around 90 on mine. If you go to the Nexgen website, if you look at the one that was provided you when you downloaded the software for your demo, not only does this one have a spot, let's click it real quick. It has a spot for your trades. It has a spot for your favorite looks. And then that last tab are those examples where you can go through and you can study. And Joel, I think that's one of the most common things. Afraid for asking for help, because what's it mean if you ask for help? It means that you're not amazing at something that's brand new to you on day one. And how embarrassing is that? I say it like that because I think my wife said something to me like that. She's like, you're a week into this. How smart do you want to be? Well, I want to know everything yesterday, guys. This path will get you there. Rules for entry, pictures of exactly what that looks like. When your rules are met, what's it look like? What's that trade look like? And then, guys, this is your high probability. This is that best of the best. As you grow into reading your indicators, well, then you may grab one of those medium opportunity or medium probability trades, which are just your ability to read the indicators. And then John Novak has provided one that talks about trading those tops and bottoms, getting into those momentum trades, making sure that as you grow with your abilities, so does your plan, looking for more opportunities, giving you the opportunity to manage a little bit. And I'm going to put that one in the room as well for you, because everything is about building a foundation and then moving forward. So there's John's checklist as well. And guys, this is your beginning path. This is what's going to get you to where you want to be. This is your entry. And then you're just going to define a management plan, because that's the second half. Consistency with entry, consistency with exit. In the beginning, as you're learning to read your indicators, keep it mechanical, keep it methodical. And this is the most mechanical approach I've ever seen. And guys, just steal it. Use it until you can make your own. Trade 2 contracts, my initial stop will be 12 ticks. I'm going to adjust it above or below that window of opportunity. I'm going to move my stop below the reversal bar or above the reversal bar in the direction of my trade. And then this is the part that really takes the opinion out. I will take profits on my first contract at $100, period. No room for opinion or fear, anxiety. And I'll move my stop to break even. And what that means for the new trader is that you're taking that first win. You're getting that dopamine kick. You're getting that little feeling of success. And your second target will be 200. Not looking for home runs. What we're looking for is 4 singles in a row. Looking to capture $300 on the highest probability trend trade to build that success, to get that memory, to get that confidence. And the reality is as you work on a management plan, you're going to see a lot of $100 break-even trades, and that's okay. Because every time you take a picture of a trade, that same picture can be used to begin to develop a management plan. And one thing you can do is, nope, RJ, you're going to be in control of your own destiny, my friend. One thing that you're going to be able to do is you'll be able to recognize the perfect entries because you have a checklist to get you in at the best of the best spot. And while this is a predetermined $100 and $200, you'll be able to come back and take a look at all the momentum on the 13.2, room determination conditions, and what you're going to recognize is now I can turn that $200 second contract into a $300, $400, $500 second contract. You can still take profits, you can still go break even, but you'll be in a position because there's money in the bank to let that next one run. And that's how a management plan comes together. So every time you post a picture in the room, you're going to tell me why you did what you did, where you got in. I'm going to see where you got out. We'll have a conversation about your rules being met, and then we'll also have conversations to help you develop that management plan. So, guys, this is the focus. First 30 days, steal that example plan. Let me give it to you in the room one more time. Take that example plan. It's yours. I'm giving it to you. Put your name on it. Follow it for 30 days. Learn to read your indicators. And post in the room. 3 types of trades you should, or 3 types of pictures you should take. You should take a pre-trade. Right now, if I'm looking at the S&P 500, I can snap a picture, right? And I can start the process of training my brain to read my indicators. I recognize the termination condition because price reached resistance and none of my trigger lines broke through. I can identify odds favorable momentum. Smalls below the large are wide, they're angled in the direction of the trend. And I can focus my attention on the 5-1 and I can see that my large triggers, my synthetics are way up there, but my small are pretty low. So if I were looking for opportunities, I can begin to define my window of opportunity. And if I take this picture pre-trade, go through my annotation, stop the market so I don't have that anxiety, I can come back and begin to look and see smalls below the large are wide, they're angled in the direction of the trend. Areas of resistance inside of favorable large triggers. I can begin to plan out my attack per the checklist and know where my potential entry spot is if my rules are met long before that pullback ever happens. And then it's just rinse and repeat, guys. Because of the message John put in the room, I wanted to focus a little more on rules, a little more on the plan for the first hour. Second hour is going to be all live market, all of your charts. We're going to look at it. But from the tutorial section, guys, there's a very, very clear path that we just discussed each of the elements for. The step-by-step path to becoming confident as soon as possible. Post your trades in class, track them in a spreadsheet, guys. Two things that are going to get you where you want to be. Then you're going to learn the rules. That's what we're here for, each and every day, discussing the rules, making sure that you're comfortable with it. Know your rules for when it's okay to trade. Simulate daily, post your pictures in class. Don't practice the wrong trades, guys. Don't do this just for the fun of it because you're bored, because there's nothing better to do. Don't take trades that start with the phrase, I hope. Get your brain focused on following the rules from day one. Simplify your plan. What are you going to commit to? Learn the rules so that it becomes easy through repetition. And then after class the next day, you can download replay data. You can go back and retrade the day that you just traded, fix mistakes, take the trades that you missed, go back to taking pictures. Once again, get them in your spreadsheet, the best of the best looks, and then repeat this process every day until you always take the correct trades. Not until you win every trade, because that's not realistic. Until you always take the correct trades, until your only two options to get in the market, actually just one, it has to be rules met. And then until you can say rules not met and sit on your hands and not click that mouse anymore. And then once you guarantee yourself you can win, that's when you go to that live money. But why on earth would you put your own money on there if you think you're ready? So NG, Apex, Elite, Top Step, each and every one of these, what they do is they put you through a combine. They have you look at a set of rules, money management, profits. You pass their combine, they fund you. And it's pretty amazing. Each one's great. Apex Traders looks like it's pretty popular these days. And see if I can open that link in a new tab. They go through, they talk about it, everything. I'm not Apex trading, but I can point you in the direction. This uses NinjaTrader 8. And a lot of people are a little gun shy about NinjaTrader 8. I understand that. I want you to see something. This is your S&P 500. Jose, here we go right here. People say, well, I have to have NinjaTrader 8 in order to do Apex. Well, you do. My NinjaTrader 8's been running for the last 2 hours. I can put together all of my analysis on NinjaTrader 7 if that's where you're comfortable. Guys, this is a NinjaTrader 8 chart. And look at this. If I put it, it's the same chart. Oh, I have the wrong trigger lines on there. It's the same chart. It's the same programming. Nothing is different other than the platform. You're going to have the exact same analysis, but you can do execution. I can still right click and sell limit 2, and I can have this go to my Apex account while I do my analysis on NinjaTrader 7 if you want. And to be honest with you guys, I run NinjaTrader 8 every day. It's not an objection point for me. John's created a template to where you can build a single entry chart on your 8, and because you're running 2 different licenses, you can run both at the same time. I've got my NinjaTrader 8 right here. I've got my NinjaTrader 7 right here. So that objection, and I'm not saying that is an objection, Jose, but if you're concerned about that NinjaTrader 8, we've worked our way through that. You do load them separately, George. So what I'll do is I'll open my NinjaTrader 7, and then I'll open my 8. And what I did this morning is I just built that one chart on 8. So if I click on it, I've got it right there. I can execute on 8. And then if I need to, I can take that same. You can make your workspaces look whatever you want your workspaces to look like. You can get your market flow up. So Jam, what it is whatever license you're using now for your NinjaTrader 7, if you do that Apex, if you come through and you do, for example, Apex, you need to be on 8, they're going to provide you with a NinjaTrader license that goes through their Rhythmic Trader. So whatever license you're using for 7 isn't going to be the same one that's on 8. So you can run them at the same time. And I've had 0 challenges doing that one. Pretty cool, isn't it? That's it, George. You can just run both of them straight from the resource page. Ninja 8 installers, Ninja 7 installers. Yep. And then what I've done is I didn't even open a workspace. I literally just built a chart so I can do my analysis on 7. But I'm not going to lie to you guys. I've been full-blown 8. Every time I'm trading, I'm on 8, start to finish. And I haven't really had any challenges. Every day I make sure that my computer's prepped. Not necessarily, RJ. It's just a platform. That's like saying that the chalkboard's better than the whiteboard. It's not so much the platform. The software, the Nexgen software is exactly the same on both platforms. Visually, they're a little different. But I don't know that it's better. It's, you know, there's preferences. Some people prefer one over the other. But both are going to identify a loss of momentum on your 13-2. Both are going to identify multiple divergences and weak triggers on the 5-1. And both are going to show you that you shouldn't be going short with these losses of momentum. You can let the market work itself out as it pushes up to key areas with all of the trigger lines below. And you can wait patiently for your rules to be met. So before I take my first break, guys, and I'm going to come back and we're going to look at everybody's charts when I get back. Is everybody comfortable with what we're talking about right now? Identifying on the 13-2 chart when odds favorable momentum is present. Identifying on the 13-2 chart when termination conditions have been reached. And identifying on the 5-1 chart when you have an area of resistance inside of favorable large triggers. That's what we're going to talk about for the rest of the day, guys. So Diamond David, I'm with you. I'm not that bright, but watch this. 2 charts, 2 platforms. Pretty easy, right? If you use an 8 range chart as well, I can put that in there. If I use a 21, I keep my 21 hidden. I'll go, oh look, there's a 21 range and it has odds favorable momentum to the downside. Here's my NinjaTrader 7. Here's my NinjaTrader 8 for execution. But David, I just put it right where it would normally be. Right where it would normally be if I were running all 7 charts. Because I'm with you. The more I look at, the less intelligent I tend to become. So, guys, I'm going to take a break. I'm going to let you watch the S&P. Price pulls all the way back to resistance, straight out of the user guide, right? Jose, you can. I do. I use NinjaTrader 8 for all the charts. Guys, what's happened over the last year or two is there were challenges with NinjaTrader 8 and it would spontaneously close. So when you take an entire trading community that has that challenge, you begin to develop a bias. You begin to start saying to yourself, well, it's no good, and it was no good once, so it can't ever be good again, right? Talking about trading my money, guys, I have an Apex account on NinjaTrader 8, right? That's exactly what I do. Because I have to. If I want to trade Apex's money rather than my money, I have to have a NinjaTrader out. Oh, why wouldn't I trade? Because it doesn't make sense to me anymore. The more I think about it, Diamond Dave, if these guys will allow me to trade their money and give them 10% of it, and I can have control of $100,000 of their money, and I get to keep 90% of everything I make, is there any reason for me to break into my savings account when I can just do it for $100 a month? You could trade one contract, You could trade 100 contracts. As long as you're consistent and following rules and making money, Diamond David, you're going to build it just like you would with your money. Is a 10% fee, is it worth it to you? You could go through and pass their combine. And let's see if I can find it real quick. And guys, they've been doing specials lately. I got an email the other day, 80% off of everything. So you could control $250,000, right? What's 80% of that? 840 for maybe $100 off, about $100 a month. You can pass their combine, hit their profit goal, and have control of a $250,000 account. And the cool thing is you can link 5 of them together if you want. Save your money for vacations. And George just reposted. And we just talked this whole thing out, George. Have a plan, right? I've given you guys the plan. Nexgen has provided you the indicators. You'll get feedback every day on everything that you do. You'll be able to identify odds favorable momentum. You'll be able to recognize areas of support inside. Everything just works. Absolutely, Claire. I think it would be silly not to. So it goes through NinjaTrader. They give you a license for NinjaTrader. They give you the ability to come through, pass their rules-based combine, and then get funding. Everybody's familiar with Nexgen Ben in here. He's been doing it for a long time, and he's one of the people that introduced people to Apex in the room. There's a lot of people doing it now. We've got a lot of clients that are beginning to use Apex, that are passing these accounts following rules. It didn't have to pay for a Ninja license either. But it all starts with that first thing, doesn't it? It all starts with having a plan, with having a checklist, with following rules, with committing to the process. Guys, I'm going to take just a few minutes. Remember that crude oil inventories are coming out in about 20 minutes. I'll be back long before then. When I come back, we're going to start looking at everybody's charts. We're going to talk about what you see, what you're doing, and what I can do to help you do it better. I'll be back in just a few minutes, guys. All right, guys, I am back. Had to talk to my tech guy real quick. Working on some stuff. For one of the things that we have is John Novak wrote a little template that updates fibs every 120 minutes, helps you identify, get more areas, a little more clarity. Had to apply that onto mine. All right, guys, this is second hour. Second hour is really going to be dedicated and focused on what you've done. So I'm going to scroll, and I want you guys to see this because I don't ever want anyone to think that I'm ignoring you. To get to the earlier pictures, I have to scroll up. I have to roll all the way up through here to get to them, which means that in order to see your questions, I've got to scroll all the way back down. And I'm going to do that intermittently. But if you ask a question and it takes me just a second to get to it, it's not because I don't think it's important. I'm working my way that direction. All right, guys, we're going to start. I'm going to grab some pictures that were posted this morning. And everything started with reminding you that having a plan is the key, guys. And the first picture that we got was really just chart reading. And one of those reminders that trigger line location is paramount. Even from a great bottom, when you have that reversal, those large triggers stayed below this area of support. These large triggers, so synthetics, stay below that area of support, which means that it's too soon for longs, guys. We're always looking for the advantage of a clear path. Chart reading pictures like this, you're going to see over and over. You're going to see them in the chart reading section on Discord. We're going to post them in the room over and over. And if you have questions about anything that you see, make sure that you're raising your hand, asking that questions, getting you where you want to be. Luciano, hope you had a blast in Europe. Let's see what you're doing. Luciano says a termination condition. He lets everything clear with odds favorable momentum. Smalls above the large, larger smashing through. There is an absolutely picture-perfect pullback to the area of support inside of favorable large triggers and taken profits. Luciano, what a great way to get back. You said you were rusty, but you followed rules perfectly. Nice job, Luciano. Alex G, let's see what you're doing this morning. Alex G, you say you have a 50-50 trade, and what that means, when we talk about a 50-50 trade, you're talking about a look where the smalls have broken through the area, but the large have not. And Alex, I think this one may even be too close to call it a 50-50. It doesn't look like the smalls have broken through. In the moment, it may have. And then when you see this pullback, notice where your large triggers and your small triggers are one right on top of the other, as opposed to where you have all that momentum on the pivot before. And then as you're coming through on your 8 range chart, Alex, you have it circled on each one. Look at where your triggers are on your 8 range chart as well. And guys, this is one of the ways that you can use multiple charts. When your momentum is odds favorable on each chart, and I want you to see this, odds favorable, and the market continues up. If you're looking at your 5-1 chart, odds favorable, and the market continues up. And then I come over to my 8 range chart, odds favorable. You know what I like to do, RJ, is I will take an 8 range chart because I don't need all the noise of market flow. I don't need to worry about bar structure, about dots on bars, about signals. I'll take that 8 range chart. Whoops. Let me cancel that. And I'll right click on it and go to my indicators. And I will turn off my market flow because I don't need to focus on that. What I really want to use this chart for is verifying momentum. See if I can close this out real quick. So now I'm not distracted by all the bars, but if I look at each chart on the S&P, odds favorable, and sure enough on my 5-1 I have odds favorable, and that market is pulling right back. There's an area of resistance right at the large triggers, top of the window up here around 80. But I can verify from a termination condition, from multiple divergences, from every trigger line going down. And then on my market flow chart, on my 8-range chart, I also have that same level of momentum coming through. On a 50-50 trade, when the smalls have broken through but the large haven't, I can make a determination on whether or not I have an advantage. One thing you will notice is we've reached an area of support. None of my trigger lines have broken through. Areas with the potential to break but not guaranteed. You can just use it as an opportunity to decide whether or not that's the trade that you want to take. And that's without the distraction of market flow. But if you are using it, you can see that we had anything can happen triggers on the 8 range when we're coming into the area that doesn't have that best look on any of your charts. So it's a great picture. Great picture, a lot of great information there. And now I'm going to scroll back up. Alex, you said that that's in your plan. 8-range triggers have to be strong. I love strong 8-range triggers, guys. They just, when all my charts are in the same direction, when all my charts have strength, makes me feel really good about the trades that I'm getting into. So Alex, if your plan said that they had to be strong, there's your strong trigger look. Look how the market goes up. There's your weekend trigger look. Look how the market retraces a little bit deeper. Great picture. And then guys, how to place a limit order. This is from the self-education page. This is a great little just reminder. If you're brand new with this, you're trying to get into the market at the right place, you see your area of support or resistance where you should be entering. It's a right click, buy or sell the limit, and get that on the price where you're looking to enter. Joel, same trade. You say not following the rules and it costs you. And I like that you'll take this picture, Joel, and I like that you'll have that level of honesty too. We hadn't broken that key area yet. It's just not the best look, and it didn't work out. You gave away the advantage of momentum there for sure. Great job taking a trade where you recognize you didn't follow your rules, and it helps you out. Alex, same thing. We have one of those 50-50 trades, right? A lot of momentum, but we haven't broken through 1, 2, 3 areas. Divergence prints on the 5-1 and that 50-50 trade. We're seeing that loss of momentum on areas with the potential to break but haven't, and it pushes right up beyond a little bit. This is a medium probability trade, and this can be a very, very good trade. But I like conditions to be perfect. Perfect conditions on the entry. And guys, when I talk about a perfect entry on the 5-1, the best of the best conditions, let me show you what I mean. We'll use this picture. At the time of pullback, absolutely no divergence. No losses of momentum on my 5-1. I like my trigger lines trending one on top of the other, creating a very small window of opportunity. So if I'm talking about the perfect 50-50 entry, Alex, that's my look right there for a long trade. And we were close, but we had that divergence right there. And that divergence is probably what killed it just a little bit for you. Then guys, as we come through, Finch, nice to see you. Finch said quick squeeze. As everything clears the area on the way down, he takes a quick little entry and quick little profits. Just 3 ticks to get the blood flowing, right? Good stuff. Guys, great pictures today so far. I'm liking it. Jose Trades. Anything can happen, trickers. You know that they're coming from a good top. You take their entry. There's no divergence. We're showing a little bit of a slowdown. You keep your stop behind the 1-to-1s. And because of everything saying down and everything saying down and everything saying down, that market somehow continued down. Jose, great trade. And then you take a momentum style trade without momentum. And it looks like you pulled one off there, but look at the difference. Neither has momentum on the 13.2. There's your look on the first one. The smalls are still outside a little bit. No divergence, odds favorable. On the second entry, those smalls are working their way inside, and you have divergence, and things have returned back in. Giving away the momentum, it's a good shot, but you didn't really give it a chance to pull back. You took a momentum style trade without momentum, Jose. Good stuff, guys. All right, 50-50. Not coming from a good bottom. Alex, we didn't reach that termination condition that creates a full reversal yet. As you start to pull back up, the smalls go above the large. Everything is coming up. And what happens here is it just pushes lower. You've got your stop. Alex, I want you to notice stop placement on this one because I have done this one more times than I care to admit. You take your entry at the top of the range, and I like that. You've got odds favorable momentum. You've got your stop directly on support inside of favorable large triggers. Do you see it? So you've actually exited within the window of opportunity here. And then it comes a couple ticks, and then it looks like it continues in the direction. And then when you're coming into your 8-range chart, if you're going to use the 8-range chart, I'm a big fan of using it. You're trading directly, you've got a reversal bar, and then this high volume area at 66, 67, you've got to keep eyes on that, especially if it's trading into resistance. You're trading into resistance on the 5-1, and you're at a 50-50 on your 13.2. Does that make sense, Alex? Sometimes your window of opportunity, guys, this is 10 ticks right here, which means that you're in that 14, 15 tick range as you get into it to put your stop where the market shouldn't go. And you have to decide if that level of risk is right for you. And some people will say, well, I'll just wait for a market flow signal, or I'll wait till that HVA with that odds favorable's met. Take a few pictures of those. I think that's a great picture. I think there's a lot of good information about window of opportunity and then stop placement and understanding that sometimes that default 10 ticks, 9 ticks that you have here isn't appropriate. Another 4 or 5 keeps you in the trade and the fight. Let's see where we're at. 10 km. Waited a long time, small triggers, gone above large triggers. You are in at the mid-band inside of favorable large triggers. Get the second divergence inside the synthetics triggers. Should have managed better like yesterday behind the tail. Original target was 37. Had to give up. Good for better. No more ATM. We'll do it manually. Second 2 ticks behind the tail. And then let it run, right? 10 km. And this is what we talked about. 2 things in this picture that are great. The first thing is the entry. 10 km. Picture perfect, right? You know that you're in at the absolute best spot. And you did it on an entry chart. And then what I like to do when I enter a trade is what's changed. What's changed at the time? You know, everything is still up, and it's this odds favorable momentum that keeps my stop in place, especially if I've already got money in the bank. When you rock star that entrance like that, you could literally be 5 ticks of risk with 10 in the bank. Yeah, focusing on ticks, focusing on those small charts. I think it's a beautiful trade, and I think it's a great management opportunity. And I'm going to go back to the phrase that I'm going to get t-shirts made. Let the 13.2 lead the way. Because if I just bring the 13.2 up here, and you don't even focus on that small chart, is there any reason at all to believe that market's not going to continue? This was a great lesson for me as I grew up with the software a little bit, is get the entry done, reduce that risk, get to where you need to be, and then start to trust that 13. If I had a nickel for every time somebody who may own the company says, trust that 13, let it get to those lines, I'd be a rich man. All right, morning. What area to respect here? Yes. Barinder, 10 km? Yes. Terminations are termination conditions right up until you reach the next termination condition. And I love it. So we can't go long into resistance with absolutely no triggers below it, right? But we're not going short. Not going short into support. And this is a 13.2. So I've got support that's held. I have resistance that's held. And what are we doing in this situation? The exact same thing. If you go to rule number 2 in the manual, remember that we said 90% of what we're doing is just reading indicators. I can't go long into the resistance and I can't go short into support. But if I sit on my hands for a little bit and I'm patient, that market's going to get me to where I need. It's going to bring me back to my advantages. So same thing here. Resistance, can't go long into resistance, and now I'm at a pivot stop out and support. In order for me to take a rules-based trade, I need to get out of this box. Does that make sense, 10K? In order for me to have a high probability trend trade, I need the advantage of a clear path. And it's going to happen. It may not happen as fast as I want it to happen, but it will happen. So when you identify resistance that's held, when you identify support that's held, let it clear. It's going to get out of that box. And that just goes right back to the picture that you showed, which I love it. You've created that box. Here's your resistance. Here's your support. Let it break. 90% is just reading the indicators, waiting for that advantage to be present. And then one more, extremely high risk. You were planning this because you missed the previous one. So order was there, got distracted, it worked, so no credit. You went short at resistance with every trigger line a mile below 10K. And it snapped right back to the trigger lines. Yeah, this is a pretty good pattern. Does everybody remember the process for determining a termination condition? Price reaches an area of resistance. And I don't blame you, but a lot of people develop a plan for this look because if price reaches resistance, where are your trigger lines? They're a full bar away below, aren't they? If the 21.3 is odds favorable to the downside 10K, there's a lot of people that'll take this trade at least to close the gap back to the large. It's a little more advanced. This is aggressive trade. But it looks like you managed it beautifully. You got in, you got out, you took profits. You took the most likely outcome when price reached resistance and the large triggers were this far away. The most likely expectation is that price is going to snap back and close that gap to the large triggers that are down so far below. That's not a trade in my plan, but I'm a big fan of that chart reading, you know? Big fan of that chart reading. I think you did a good job with that one. See what this John Novak character is doing. This was a trend trade. And this is the one that we looked at earlier, I think, today, guys. If you take a trend trade, every rule's met, 100%, and it doesn't work. And remember, that's going to happen. Look at what happens. The large triggers all remain down on the smaller, faster chart, and now the small triggers are in favor as well. If this trend trade doesn't work, this is what we call a continuation. And it has to be of a rules met trend trade. The one thing that always amazes me is the entry, more often than not, is it almost virtually the exact same price. So you get in on the first one, it doesn't work out, everything still says down, everything still says no termination conditions. Here's your opportunity to get into that trade to finish the move. This is a great picture. You got burned yesterday, 10K? It happens. Nobody gets burned though. And let's go to the language thing. If the rules are met, that means that you have a statistical advantage, right? Does that make sense, everybody? If my rules are met, if my rules for a high probability trend trade are met, I have a statistical advantage. I have a proven methodology that says that this is a setup, this is a look, these are the advantages that produce more winners than losers. Give me a Y in the room if you're with me on that, because I do think language is important sometimes. When you follow the rules for a high probability trend trade, you have a statistical advantage. If something that wins 80% of the time has to lose 20% of the time, there's two ways to look at it. The first way is to say, oh, I got burned, the market hates me, this sucks, I'm mad, I have to change everything. Or you can accept that you're trading a methodology that produces winners more than it produces losers, and you go, well, that was a cost of doing business. I'm going to let the market be wrong with a little bit of dignity, and then I'm going to come back and get my share when the conditions are correct again. And I see that on charts where people down talk themselves a lot, or they talk about, they create a rules-based trade that was perfect, and then they start negative talking the market like the market's out to get them. And John, nice segue there. And I'm not beating you up at all, Brenda, because I think that it's normal and we all do it. And John just posted this in here, but I think it's effective a lot. And this is a quick little synopsis, and there's videos online. And normal losses are a part. Believe that you don't know that a trade is going to win or lose becomes very important, guys. I don't know if any of my trades, thanks 10K, I don't know if any of my trades are going to win. I don't know if any of my trades are going to lose, but what I do know is that when the advantages are in place, the odds of me winning is greater than the odds of me losing. You guys, look, there's that box. They stayed in it for a little bit, didn't they? And then they broke down right to that next area of support. And guys, what you're going to find too is sometimes you're going to inadvertently be a little negative, and you don't want to do it, but it happens. You just dust off and go again. Sometimes you're going to lose a trade. Dust off and go again. And that's why simulator is so important. That's why when you think you're ready to go live, such a big proponent of using one of those prop firms. Go live with their money. Because if you're really ready, you're going to get funded. OPP or OPM. Yuri 13.2 says down with strength. 5.1 says down with strength. 8 range says down with strength. And even your 21.3 says down with strength. Every chart says down. Every chart has odds favorable momentum. Yuri, you take the perfect entry and the market's going down. And I love it when what I say is exactly the picture that John posts. Down, 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 down. Holy smokes. Paul, there's a lot that goes into it, guys. We're going to take care of 100%, making sure that you guys can recognize the looks. We're going to make sure that you guys understand the advantages. And then the key is your ability to execute, your willingness to follow the rules. But I can tell you right now, this is an amazing look for success. Every chart agrees. Every trigger is strong in the same direction. And guys, you'll notice that NinjaTrader 8 chart in there for execution, and it looks exactly like NinjaTrader 7. And Luciano says, let me show you what it looks like when you make money on that look. Great trade, Luciano. Everything says down. It broke out of that range that we were talking about. Odds favorable. Every trigger agrees. And that's that patience piece, isn't it? If you just wait for that box to break, every chart agrees, and there's your opportunity, guys. Claire says, I'm not going to let the guys have all the fun. Beautiful trade. 73.50 to 67.50. That's 6 points. $300 over the course of 2 minutes with a high probability trend trade. Is there anyone in this room right now that doesn't understand why Claire, why Luciano, why John, why probably a lot of people that aren't posting took this trade? Is there any mystery in the setup that I can clear up for you? Here's your crude oil, trying to figure things out as it comes into key areas. What does that mean, Gary? And have you reached out to Jason to help you? Doesn't look like one. He fixed it for you? I love it. Guys, if you've never met Jason Sager, he's amazing. There's very little that that gentleman can't fix. Every trigger line is below 80.29, right? Okay. Every trigger line is below 80.29, which means that we're not looking for long trades. Every trigger line is above 80.20, which means we're not looking for short trades, which means we're going to wait for the advantage of a clear path. If you're following rules, if you're a high probability trend trader, you do not have the advantage of momentum right now, nor do you have the advantage of a clear path, which means that rules aren't met, no trade to be had. Pretty cool how simple that becomes, isn't it? Are my rules met? If they are, I'll pull the trigger. If they're not, I'll sit on my hands. Have a lot of different traders tell me a lot of different things. We've had people in the classroom that'll play video games on the side until their rules are met on a larger chart. I've had people in the classroom that listen to reggae music, that search Zillow for their dream house. I always had a sketch pad. I always have a sketch pad handy, and I'll sit and I'll draw, and not even anything specific. I'll just keep my hand moving with a pen, or a pencil, and I'll keep that pen in my hand instead of the mouse until it's time to take a trade. Josh, beautiful. And notice the annotation. All rules met on the 13.2, market flowing perfectly for a high probability trend trade. Got in at the mid band, made money all the way down. Beautiful trade, Josh. Paul, why did you turn on tick replay? I gotcha. Do you have Norton? Guys, one of the things that I really think helped me an awful lot, when you come to the education page and you go through to the software user guide, there's a section on daily computer preparation for high performance. Paul, I don't know if you're running Norton. I run Norton Utilities, and I do this every day. I come through and I repair everything, and I reclaim my memory, and I go to real-time boost, ultra performance gaming. And if I do this first thing, I'm having zero challenges, and it helps a lot. Dave B, your 5-1 chart's not showing the 64.90 fib. So then whenever our charts look different, I always ask, are we on your data series? Are you 10 days back? Because that'll affect the fibs. Dave B, another thing that I look at is when you woke up this morning and opened up, did you go to Documents? Did you go to NinjaTrader 7 database and get rid of the cache and tick? You deleted the folders? Are you on Eastern time frame? Nope. And that may be the difference. Because you and I'm in the West Coast right now. So I'm in, what is that, Pacific time? But you'll notice that my computer says 10:44 a.m. Guys, I'm looking at my phone. It's 7:44 a.m. here right now. And that helps, Dave B, because your computer is going to have a different midnight than my computer. And there's some technical things that go through and make a difference on that. And honestly, I'm better at reading indicators than I am tech help. But sometimes that'll create a discrepancy because of having a different midnight, having that bar that forms at that. So when you change, I believe it's going to violate your software, if I'm not mistaken. You may want to, just in case, because I did that and I thought my brother shut off my software on me. You can go, trying to get that where I need it. You can go down to the bottom to tech support and just make sure that Jason knows that you're making that change. Yeah, because I believe when you change the time frame, it's telling Nexgen that it's not the same setup. And there are protective measures in place to keep people from pirating software. So you may want to just talk to Jason just for a second on that one and see where you're at. Some people have to have different time frames just because of work or something like that. And then, yeah, Bobby T, deleting the cache and tick every morning. That's second nature for me each and every morning. And then, guys, just because crude oil wants to remind us, small's above the large are wide, they're angled in the direction of the trend. How do you like that, guys? Deleting cash and tick. Bobby, how do you do it? I'll show you in 1 second. Before I do it, I want to do this. Those of you following the markets, I'm hoping you're going to show me this one, guys. Post some pictures of this trade. Let the new people know that everybody's doing it. I'm going to take a high probability trend trade checklist, the same one that we gave you guys in class that you should have printed out on your folder. Is the market coming from a good top or bottom? Look at this. This is a termination condition that creates a full reversal. I can answer yes to this first question. Do I have odds favorable momentum? Smalls outside of the large, larger wide, angled in the direction of the trend? Absolutely, I do. There are no termination condition present, are there? We haven't reached an area. I can put yes on that. And then look at this window of opportunity. It pulls right back just above that mid-band, a tick above. Remember we said a tick or two above? Inside of those favorable large triggers, and the market continues up. Each and every day, I'm going to do this. I'm going to share it to screencast. It's going to tell me to sign in. I'll do that later. And then I'm going to go through and I'm going to put it right into my spreadsheet. So Bobby T, I'm going to do this for everybody, not just you. I'm going to give you the link to daily computer preparation, but I'm not going to leave you high and dry. I'm going to also show you exactly what you're going to do. Here's the picture when you're doing that cash and tick. But I'm just going to pull up my File Explorer. And then once I pull up my File Explorer, I'm going to go to Documents, NinjaTrader 7. This is my database folder. This is where all the data is stored. And I'm going to get rid of cash and tick. And I'm going to start fresh each and every morning. And this is my routine every morning. I do this, and then I open up my Norton Utilities. And once my Norton Utilities are up, I go through and I optimize for the day. I get my computer in fight and condition. And then I go and I open up NinjaTrader, whether it's 8 or 7. It is, yeah, they don't just give it to you. But your computers will default to like a saving mode where it's not going to use all the power that it's got to make it happen. And Norton Utilities allows me to go in and pop it into that ultra performance gaming. And I feel like everything works smoother when I'm there. So, Paul, let's see what you're doing. Paul, you've got odds favorable momentum. You don't have anything in the way. You take an entry right at that mid-band. Notice that we are coming from a pivot stop out, staying aware of that. Coming through, odds favorable. And it looks like you've got your stop down here where the market shouldn't go, but it is right at an HVA line. Good stuff. That's the S&P. It looks like we popped through just a little bit. Right down to that HVA line, it looks like. 50-50 on my chart. I've got the synthetics on there. I know that you don't. Still like to come over and take a look. Pull yours back up one more time. Perfect pivot stop out right at 1-to-1s. This is, someone was asking yesterday about what's the white bar? Well, a white bar right at that pivot. I don't know the whys, I'm not going to lie, but what I do know is that when I have a white bar right at a pivot, and it happens to be a pivot stop out that lines up with a pivot stop out, all my large triggers below those areas, things don't work out for me that well. Took it twice. Took the first one, made quick little profits and then break even, and then took the second one. And look at that strength on those trigger lines coming from the pivot stop out and rolling. And I think on that second one, the small triggers, large were pinching. Maybe not. I like the first one. Couple small red flags there. Pivot stop out, pivot stop out. That HVA with the signal may be your best bet. But it's still coming from that bad bottom. Looks like they want to go retest a little bit, Paul. Good trading. I think it's a good look. Not sure that I would take it twice against this strength, though. Mine are a little different. I've got my synthetic fibs on my 13.2, right? So this is where that high probability trend trade doesn't work. Wait for all the triggers to match again. You have an extra bounce. I like it. Jam, you say, given that I optimize with Norton each day, do I let NT8 use all the tick replay on 13.2, 5.1 rather than toning everything down to prevent crashes? This may jinx me. I haven't crashed all day yet. I haven't had one crash today. I'll run my synthetics on my 13.2. I haven't had a challenge with that in quite a while. Let's see what happens. Let's see if we can make it crash. And we'll see what my apex looks like. It should take just a second to load, guys. Not my apex, but my NinjaTrader 8. Remember, it's the exact same software. It's the exact same. Every code is the same. Yeah, Paul, here's my 13.2. Have those synthetics right there. I have them right here as well. And then that's what the 5.1 looked like as we came through. So Jam, I'm going to pull it up and see exactly what I have. Gary, this is a 5.1. Your chart looks different than mine. At 10:36, I've got my large triggers. I've got my synthetic triggers. I've got no divergence. Let's see if we can spot the differences. You pull all the way down to 64.90. I pull all the way down to 64.90. 1-to-1s are there, 63.25, 63.25. Gary, what's different? Your lines are solid instead of dashed like mine. Synthetic triggers are different. They're in the exact same spot, aren't they? Just coming through. And now what are we seeing? Now all the trigger lines are starting to agree, right? Termination condition, everything starts pointing up, everything starts pointing up. There was your stab back to the small triggers, but it's below everything. Not a great continuation look. Let's see what happens when all the charts agree. Let's see if they want to finish that move to 76.61. Large triggers are beginning to break above that area of resistance now. Gary, it's probably just a visual thing. Yours are solid, mine are dashed a little bit. Maybe. And if we go to the software user guide, if you want to change that, Increasing, decreasing trigger line thickness and size. There you go, Gary. Don't show you on 8. Maybe it translates. Let's see. Same spot. 4 points, line dash, solid, colors, average shadow. I'll tell you what, Gary. There you go. John came in. You could always go to tech as well if you need some help, but the exact same things. There's your colors. There's your points. Thank you for that picture, John. And then there it goes, guys. Paul, they just wanted to go a little lower. And then they finish the move up to resistance. And that happens sometimes. As you lose momentum, look how the market pushes lower. Divergence on the 13.2, lower divergence, triggers begin to roll. If price reaches support, in order to go short, we have to let trigger lines break through. As of now, as we get to a mid-band, as we get to support, you guys remember the snapback theory? Price accelerates away from those synthetic triggers, hits a fib. Synthetic triggers are all the way up here at that reversal bar. It may, not guaranteed, but it may pull all the way back and close the gap to those synthetic triggers. Guys, this is crude oil trading directly into support. Sometimes you can take a look at a larger chart. What's your 21.3 say? 21.3 says we've hit support, all the triggers above, support, all the triggers above, not going short yet. Have to let an area clear with odds favorable momentum to begin looking for trades in the direction of the trend. Smalls are breaking through, but the large have not. Just chart reading right now, guys. This area has the potential to break with momentum, but has not broken, which means that some traders, rather than simply taking that high probability trend trade look with the smalls outside, everything down, small window of opportunity, they'll wait to determine whether or not divergence prints. And it really just depends on what your plan says. What does your plan say about 50-50 trades? What's it say about your entry? What's it say about the advantages? From my example plan that we presented in class, it says no divergence on the 5-1, which means no matter what happens next, because this divergence prints, it's not a trade that I'm willing to enter because my rules are not met. It means sometimes I'm going to watch that market go without me. Sometimes that trend trade is going to work beautifully and it's just going to drop forever. But my plan says if divergence prints, it's not my trade. And that's my only option. Rules met, rules not met. And what you're seeing right now gives you a little bit of an indication why for brand new users that divergence becomes a great indication, especially from a pivot that hasn't reached a key area, that trades indetermination conditions. And now we'll look for an opportunity for continuation up. Does that make sense, guys? Because my plan says divergence on a 5-1 at the time of entry negates my trade, it keeps me safe. It keeps me out of that trouble. And it keeps me out of trouble more often than it has me missing trades. So that's been formulated into my plan. Gary, on crude oil, you have a pivot coming from beyond the area. Looks like you had a little change of the guards. As you trade into that mid-band, you're looking for that potential entry. Nice pre-trade pick. Safia. Is the market coming from a good top or bottom? It's always weird. I lose my mouse on these for a second. Is it coming from a good top or bottom? There's that mid-band termination condition that creates a full reversal. Do you have odds favorable? You do. No termination condition. Safia, you're trading into support a little bit here. Price is reached, triggers are above. Maybe rule number 2, not met. And it looks like you took an entry, and I can't see your entry, Safia. No worries. So when you take the picture, Safia, do this for me. So for example, when you present a picture, line up the charts so that I can see what's happening on your 13.2. And then more importantly, or just as important, let me see what's happening on your 5.1 as well. Because then we can take a look at that entry and see if that entry lined up with the rules. So here's a good picture. Safia, does that help a little bit? I don't want you lost. In Georgia, reversal bar being true just simply means that the bar printed. Here's a reversal bar. Awesome, no problem, Safia. Once this bar prints and it happens, that bar is true. And if we look at the current market, so on my 5.1, this is my reversal bar marker, George. If price pulls up to 80.66, then I'm going to have a green up bar. If it doesn't make it there and continues down, I'll have another set of down bars. Same thing over here. If this bar goes all the way up to 80 and change, then I'll have a reversal bar to the upside. Does that make sense? Gary, you say you're missing a fib. You've been fighting charts all day, right? Awesome, George. All the same questions, Gary. Are you 10 days back? Don't shoot yourself. It always gets better. Guys, anytime you're struggling with the software, anytime you're struggling with anything tech related, give Jason an opportunity to help you. Give it a try. Back when I was a mechanic, guys, I'd go after something and sometimes I'd just get frustrated. If you can't figure it out yourself, let somebody that's an expert help you. And then John's going to tell you just wipe out and go. Always 10 days back, clear, taking cash. So John's telling you it's probably a good time to just start over, rebuild everything, start from fresh. And then let Jason do it. He can do it in 3 minutes. I'm a big fan of letting Jason do it. He's so much smarter. Let's see what we have here, guys. Price reaches 1-to-1s, trigger lines remain below. Resistance, trigger lines below. 1, 2, 3 divergences coming directly from a termination condition that the trigger lines haven't broken. Good opportunity to exercise your patience, right? RJ, are you predicting the future? I like it. Let's see what happens. Strong triggers into a termination condition, 3 divergences, still strong triggers. We'll see. I like it. It may fail and go down, or it may go up. This is the greatest thing is I have zero idea. I don't know what the market's going to do. I know that I'm not going long into resistance, but I'm not going short against that look. I like it. RJ, you love things to go the other direction. See, I notice patterns in people. RJ likes to anticipate the change. And that's good because it means that you're reading your indicators, right? You're watching that slowdown. As long as you understand and look at the other side of the coin as well. And I'm going to show you why. And I think that this is a really good tool. No matter what your 5-1 says, RJ, no reason to go short yet, right? And I think that you have taken this lesson and applied it wonderfully. Everything says up on the 13.2, but we're beginning to recognize a slowdown on the smaller, faster chart. So you can see change happening faster here as the 13.2 is still working in that direction. And let me load my template. And Gary, I've downloaded the newest one that updates a little more often on that 13.2 Renko. RJ, you are becoming a chart reader, my friend. You do have that? Okay. That just occurred to me. I wanted to see. Got that one. Let me make sure that my templates are all done. So Gary, I'm going to go through my due diligence as well. 5-1 Renko 2023. We'll let that one go too. Claire, you're saying the larger below the synthetic as we get into that one? Mine's coming up right now. I like that look, Claire. I'm a big fan of that. Still inside a little bit on mine. Only one or two things can happen, right? It's either going to go up or down. You put a sell there, RJ? Awesome. Guys, I'm going to take a few minutes. We'll see what happens at this termination condition. We'll see what happens with these strong triggers with the small outside. And one or two things are going to happen, right? Rules say. Rules say. Love it, guys. I'll be back in just a minute. Post your pictures. Post your questions. Last hour is going to be dedicated to you guys. Anything and everything you want to talk about, let's talk about it. Anything you need clarity on, let's find it for you. I'm going to mute this thing for a minute, and I will be back in just a few minutes. All right, guys, I'm back. Let's get into this last hour. I think we just had an amazing lesson, didn't we? Without a doubt, and it revolves around this one. My favorite book, How to Commit Financial Suicide, One Easy Step by John Novak. I've read this copy quite a bit. Warning signs your friends are in trouble. They're trading against strong triggers, trading in determination conditions. It takes a while to believe it, right? And RJ, without a doubt, I know exactly where your head's at, because what this means, RJ, and you're going to love this answer, it means that you're reading your indicators. It means that what you're doing, and let me take the picture, because I've been exactly where you are. 3 divergences in the same location may reverse the market, right? This is considered a termination condition. There's a couple key things here. Even at the time of that third divergence, you still have odds favorable momentum to the upside. So it's taking the lessons, guys. It's taking these small pieces and applying them all together. Triggers up, triggers outside, trend is green. Banking on this red line to hold rarely works out. So at the exact same time, I think talking to yourself helps a lot. And RJ, hopefully this helps you, and maybe this helps someone else that's putting all their eggs in the basket on a red line. Help me in class real quick, guys. I got 59 of you. What direction is the trend on the 13.2? It's up, right? What direction is the momentum on the 13.2? Up. So if you go through a simple process here, and you just ask yourself, is this my best trigger look for shorts? What do you think, guys? Is this my best trigger look for shorts? Of course it's not, right? And it's easy if you slow down just a second. But then let's go to the other side. You can let a small chart read 3 divergences sway the opinion of what the large chart's telling you. Because in the beginning, your brain's only going to pick up on, well, I see 3 divergences, it must be going down. And it's going to ignore that 13.2. So this is why very much I like to start on the 13.2. I like to make sure that the 13.2 gives me my best of the best. And then when I have that best of the best on the 13.2, then we can carry it over to the 5.1 and start making decisions on it. Does that make sense, guys? When you begin seeing more and more, when you begin seeing things happening on a smaller, faster chart, it's wonderful because it means that you're reading your indicators. It means that you're beginning to take the lessons that we talk about in class and you are applying them, although you're not applying them as effectively as you will in the near future. And the same thing goes here. If you look at 1036, right here where price reaches support, we'll do this one right here. Price is reaching support. If I come over to my 5.1 chart, well, I didn't get any divergences there, huh? But you may say to yourself right here, it's 3 divergences, it may push up, but always asking, is it my best look for longs? Is it my best look for shorts? Am I putting myself in an advantageous position? So great chart reading on that one. And RJ, I think that's a good lesson for all of us looking at whether or not the advantages are present. As we reach this line, this blue line, this isn't my best look for longs. So you kind of put yourself in that position. And then you guys are asking, there's my 8 range setup. There's my NinjaTrader 8 setup. It looks 100% exactly. Like my NinjaTrader 7. So who was asking the question, am I pulling everything off of 8? Trying to do it. I don't remember who asked that. But my answer is no. Jam, you were asking. I optimize and I run 8 pretty much exactly like I run 7, and it works great for me, guys. This has been running for the last 4 hours without a hitch. It's the exact same software. Whoops. And I'll get my NinjaTrader 7 back up so we can look at those charts. And what are we looking at on crude? Smalls have broken through the area, right? 50-50 trade. 31 has the potential to break with odds favorable momentum, but it hasn't broken yet. 2 divergences on the 5-1. What does your plan say about a 50-50 with divergence? John Novak posted in the room. He took an entry on the continuation style. Nope, he took trend trade. Odds favorable on the 21. Everything up on the 13-2. His entry is at support inside of favorable large triggers. Looks like when the fibs break. Down here is his entry. Everything up. There's a pullback. Took his target. Enters again. Stops in place. And now there's weaker triggers into the Fibonacci areas. He's not taking longs anymore. Nice trading. Got in with odds favorable. Took a medium probability with nothing in the way. Identified where the market should stop. Nice trading, John. Great chart read. There was the best look. With odds favorable momentum, the market continues. Anything can happen, but no terminations. And now where anything can happen, not even through the areas, divergence prints, smalls inside, losing the advantage. And you can see how the further this moves from that termination condition, the fewer and fewer advantages that we have. And guys, this is why it's so important that when the opportunity presents itself, you're catching the best of the best trades. Crude oil still on that 50-50. Still has strong triggers, but 2 divergences. If you entered the market at the mid-band, you have to identify your first trouble spot. Maybe you take quick profits at it, get to a 0 loss, because that's what medium probability trades are all about. Identifying challenges. What are your challenges? 31 hasn't broken, but it has the potential to break because of odds favorable momentum. 2 losses in momentum on the 5-1. All my trigger lines are above this area of support on my 5-1, the smaller, faster chart. This is where some people will begin to incorporate a market flow chart. I have a pivot stop out. My smalls are beginning to return. And they'll incorporate a 21-3. What's it saying? Termination conditions all day on the 21-3. Now 3 divergences on the 5-1. And look how price begins to head up. Pretty amazing how you can look at your indicators, understand where the market's likely to go, understand where it's likely to stop, use a smaller time frame to help keep you in an advantageous position. And now you're just waiting for everything to line up. All right, we've looked at live indicators. I'm not going to talk in circles over and over, so what I'm going to do so I'm going to go to the entry techniques. High probability trend trades, guys. This is available not only in the user guide on the web page, but guys, these pictures are available in chart reading. If you're wondering, what's your best look? What's the best look to get into a trend trade? Every trigger agrees, guys. Everything says up. Windows of opportunity are small. Everything's trending in the direction. Taking advantage. Notice how the large triggers are coming through the area. It puts that area inside a favorable, continues in the direction. Every trigger says down. Market continues in the direction, identifying that best of the best. Gary, let's see what you did. Gary, please go to Jason. Please go to Jason. Let him fix it. Just create a ticket. It can be frustrating, but it doesn't have to be. Everything agrees, guys. Not odds favorable, smalls get below. No areas inside of favorable, large triggers helping. After those Fibonacci areas hold, waiting for the reversal, then everything agrees. Market goes. Safia, beautiful. Catching that perfect entry, taking that exit where everything slows down. Little late on the last one. Those one-to-ones with weak triggers becomes a great target. Nice job. Taking those lessons, right? And you're showing me those entries as well. Got in a little bit high here. Stops in a great spot. Beautiful exit. You're doing wonderful. Keep doing it. Keep posting the pictures, and thank you for showing me the entries. Could have got in a little bit lower on this one, a little more profit, but still a beautiful trade. And then not giving up when everything still says up and taking it to those next key levels. Good job. Great job, guys. Termination condition. Creating that full reversal, but the large triggers are still below 80.50, aren't they? John says even on the 5-1. Yellow dots at Fibonacci areas. Using it for a second target. And this picture from 2020, but still true today. Great picture, John. Thank you for that. So let's freeze frame. Are you ready? You guys want to help me annotate a chart? Is rule number 1 met on this chart? Do I have odds favorable momentum? I certainly do. Paul getting ahead of me. Have I reached that key area? Not yet, right? So rules 1 and 2 are met on a 13-2. Whoops. So let's go to the 5-1. Can I identify, even without a reversal bar, areas of support inside of favorable large triggers It's a pretty small window of opportunity, wouldn't you say? So about 3 ticks above that mid band is where Paul says activate that limit order. I agree. Now I've reached potential, right? Got a divergence high. Everything is screaming. Everything is screaming. Can we incorporate an 8 range chart? Odds favorable. So this is where you ask your plan. Some people say, if I get divergence at this potential termination condition, it's no longer my trade. If I do get a pullback and there is no divergence, all day long I'll look for that opportunity to trade to that next key Fibonacci area. Do you see how quickly your chart read can begin to happen? Now we've cleared that trouble spot. We're at the tail end of momentum. We're losing momentum on the 5-1 a little bit. Every chart agrees to the upside. We can identify where it's likely to continue. I can identify where it's likely to go. I can create profit targets. Is this the best of the best look? Small triggers returning. Small triggers returning. Have a small little window of opportunity. Every chart is green. Every chart says up. Every trigger line is up. And then putting a stop using that reversal bar marker as your max risk, which means that in a market where everything agrees to the upside, John's willing to put about 10 ticks of risk on it. It's just chart reading, talking about the advantages. Are these advantages present? Is this my best of the best look? Am I fighting anything? Identified where the market was likely to stop. Notice that these pivots didn't make that key area, adding strength to the fact that 81.15 is a good potential stopping point. Oh, I maybe didn't on my CL. So let's update that template real quick. There's that template update. Still clear of every termination condition, aren't we? Thank you, John. We'll see what happens. Guys, reminder that we don't call trades in Nexgen. When I talk about recognizing advantages, when I talk about rules being met, it's because we're educating ourselves on what it looks like when those rules are met. It's because we're educating ourselves on what the information is that the indicators are giving us. I don't have a Oh, Paul, this is John. You do have to enable tick replay. Use a 5-1 dynamic Renko bar 2023. Right there, Paul. Thought you were talking to me, John. I was like, So RJ, once again, let's do this one. We've reached resistance, right? We've got a couple divergences. RJ, I knew that we were going to come in to see this one. Let's go triggers only. Is this your best look for a short trade? No, no, no. I love it. So we're not going to get into it, right? Because if this market is going to go down, we're going to see some change on this 5-1. These large triggers are going to roll, the synthetics are going to roll, and we'll let it do the work. Right now, 13.2 is primed for a retracement, but not my best look for shorts, not my best look for longs. Maybe my best look to sit on my hands for just a second. And let's let the market, let's let those deep pocket investors determine whether or not this key area is going to break or whether or not it's going to hold. You guys have the advantage of seeing these areas with the potential to break and the potential to hold. You've got a very clear set of rules to identify when they've broken and when they've held. So now we're just sitting on hands, right? It is hard to wait sometimes. Stand up, walk away. And guys, there we go. Right to that key area. Right to that green box that we drew in 8 minutes ago. Everything set up and the market went up. Everything said the market was likely to stop here, and it did. I did. I updated my template. I loaded it. I did that like 5 minutes ago. 5-1 Rinko. Oh, that was 21.3. 13.2 Rinko, 2023. Okay. I don't know what that means, John. Guys, I'm not impervious to tech issues, just like anyone else. So I go to the pros, just like you do. Everything updated, everything there. Gary, you say mine look like mine, yours look like mine now, but you're a wreck. Go have lunch. It's 11:38. Go get you some deep dish pizza. Relax for a minute. If you're not there mentally, if you've had challenges, guys, it's okay to walk away. It's all right to just take a second, walk away, clear your head, and then come back with a fresh set of eyes. You'll be good to go. And RJ, once again, not your best look for shorts. Every trigger line was up and the market continued up. How many times do you need to see this lesson to believe it? It took me quite a few, RJ. I'm not going to lie. It took me quite a few. We don't have to anticipate when the market's going to turn. Guys, we can witness that the market has turned. We don't have to anticipate that an area is going to break. We can witness that the market has broken. And it always brings me to this picture. Two types of people in the market, guys. I like this analogy because it works for me. And the market's going to do whatever it wants to, absolutely. There's these guys, these big old sharks, deep pockets, institutional traders, big money investors. These are the guys that create the tops and the bottoms at these key Fibonacci areas. These are the guys that establish the momentum. It's not me, right? I want to be the remora. I want this guy to establish a top or a bottom. I want him to provide me odds favorable momentum. And then I'm going to take my little chunk out of all of his hard work. There's the guy that tried to be first, that hoped that a Fibonacci area held, that hoped that the market was going to reverse. And yeah, RJ, it's hard to do. Just turn off that brain, right? Wait for everything to agree. Don't miss this trade, make your money. Don't miss this trade, make your money. And if you're catching these trades where everything says it's going to go, then you're not worried so much about trying to catch the reversal. You're really focused on catching those advantages. And guys, this is the picture that's been with us for years. Let an area break. Let the triggers roll, right? Look for that high volume area opportunity. If it presents itself and you get strong triggers in the same direction, sell your pullback. When the next termination condition is reached, sit on your hands. If it's really going to work, the triggers are going to roll. If the triggers roll, you'll look for a high volume area opportunity. And if everything rolls and is strong, you'll look for that trend trade going in the direction. And if it's really going to be a top, the triggers are going to roll. And if it's really going to be a bottom, the triggers are going to roll. So now we've reached the edge of Fibonacci. Weak triggers. No triggers have broken through. If it's really going to be a top, those triggers are going to roll. Patience. They say it's a virtue. Word on the street. Does that make sense for you guys that keep saying in your brain, well, how do I catch that top? How do I catch that bottom? If it's really going to be a top, there's a set of rules designed to help you catch it. If it's really a bottom, there's a set of rules designed to help you catch it. And if you go to the trade rules, this is your best of the best, right? Your high probability trend trade. This is the one that's going to teach you to recognize the change when it's time. If the top is true, if the termination condition is true, you're going to learn that high volume area trade. This is your first shot. Making sure that the trigger lines roll. This is a higher probability shot at going the other direction. And then using those termination conditions, letting the trigger lines roll, understanding the momentum trade and where the advantages are. Termination condition, if it's really going to be a top, triggers are going to roll. Small triggers are going to be strong against that upward direction. And you'll be able to look for a small opportunity on a tiny pullback. Paul, remember yesterday we talked about when that momentum trade snaps back to those small triggers on the 8 range, strong in the direction. Beautiful opportunity to catch a move after a termination condition. So let the sharks do their thing. Let the sharks do their thing. Let them fight it out, guys. We don't have to be first. I don't want to be first. You've got Fibonacci. You can identify where the market's likely to go. You've got T3 trigger lines. You can identify when we're starting to change. Where are the large triggers? There's not. Absolutely, RJ. Let them fight. John. It's support going the other way, right? It's supporting that bounce up. Guys, when I come into a termination condition like this and I'm like, man, I've got weak triggers, I've got a fib, but my large triggers have remained above. Do you see this look? If this is really going to hold, these large triggers are going to turn and get below this area. If this is really just a little bit of overrun and the market's going to reverse, these triggers are going to get below that fib, aren't they? Just a little key look to keep you from jumping too soon. If you said, well, I got a reversal bar It pulled back to the mid-band for that momentum trade. Notice how all of your trigger lines are still above that area of resistance. Just in a holding pattern. Does that make sense, guys? Sim is a good thing. Guys, not every day is going to go smooth for you. Recognizing that you're out of sorts a little bit mentally is huge. And straight from that little Mark Douglas, RJ, this is one, and everybody really. Nexgen software helps you determine how to measure the imbalance of the buyers versus the sellers. You'll win a trade because of the traders who follow after your entry. That's all those people that have identified it going. RJ, it means that if the trigger lines are on this side of the resistance, this may be potential overrun, but the reality is, until these trigger lines get back down here, or I get some indication that it was just overrun, short trades have the potential to be very short-lived. Large triggers are still up. Large triggers are still above the areas. They'll come down. If this market's going to really go down, they have to follow. If they don't follow, then we come to that full bar away, probably going to snap back. So in just a little bit of a holding pattern, waiting for the best of the best, we kind of see the same thing here. If it's really going to roll, we're going to get a little bit of symmetry. Colors are going to line up. Triggers are going to line up. Everything says up. Haven't gotten a reversal bar. John says that this top is good enough for him to take a shot at it. Very low risk. But notice how smalls get below the large roll. He gets a trigger roll on the 8 range. He's not just banking on the red line, he's banking on or looking at all of the trigger lines beginning to roll below that key area of resistance, identifying a slowdown before it happens, but everything is still above this area, so he's not going to bet the farm on this one. Great chart reading coming together as we come into the lunch hour, right? Paul, Ninja 8 question. I don't know why I'm opening it. John will probably do it. You want to flip accounts between sim and assessment account? Is there a way to link all your charts so they switch at the same time? You know what? I don't know. I haven't seen one. I looked for that once. I looked for the link, and I don't think 8 has the link feature like 7 does. On Ninja 7, even then, if I link the charts, I still have to come through and activate on the chart. If I'm on different accounts on my ATM or on my chart trader, it won't work. The color thing on Ninja, if these are all the same color, Paul, and I switch contracts or something, it'll go over and it'll switch them all on every chart. So I don't have to go through and do each one. I can do it one time. Sure. Every trigger remained up. Every trigger remained above 39.91. And the market continues to go up. And John, you broke one rule, which is okay. It was assertive. He knows it's assertive and he knows how to manage it. And I think that's the difference. When you can read your charts, you'll begin to take those assertive trades and manage them tightly. And it's worth the risk because the potential to make 7 or 8 points, risking 1, is great. But every trigger above that Fibonacci. Absolutely. Can't go long into resistance. Shouldn't go short against every trigger line above Fibonacci. Unless you've got 25 years with the software, chances are you need just a minute. And then RJ, remember we said, if this is just a little bit of overrun, these will find their way back, won't they? No need to hope. They either will or they won't. You can hope all you want. Oh, and there you go. F1 on your keyboard will pull up help. Midband is reached. Large triggers are above the reversal bar marker. Break a rule, take a loss. Termination rules say if price reaches an area and the large triggers remain a full bar away, meaning that they're up here above this reversal bar marker, guys. Remember that vacuum, that snapback? It's not guaranteed to happen, but price pulls away from the synthetic triggers too fast and too far into a Fibonacci area. It'll snap back to the triggers. Let's see if this one snaps back to 81.10. And there's a divergence on the 5-1, just kind of furthering Paul recognizing a loss of momentum on the 5-1. Confirming that the mid-band has more potential to hold, right? So we've got a few reasons here. Large triggers above the reversal bar marker, divergence on the small chart. It's all repetition. The more you see something, the easier it becomes to recognize. Guys, I can't predict the future, but I do enough study on patterns that I can create expectations based on what I'm seeing. Does that make sense? So I don't have to predict, but what I can do is say this is the most likely outcome based on patterns that repeat themselves. Because that's the most likely outcome, I'm not entering the market down here at 96 because that gap theory suggests price may close the gap. And then once again, everything begins to break, every trigger agrees, price snaps back to those small. Some people see this as an opportunity in a market that is trending strong to the upside. And now what do we see? There's those one-to-ones, divergence prints, trending market. When price pulls back, if it pulls back to 4,000, guys, what do the rules of termination conditions suggest? Price reaches an area of support. Every trigger line is above that area of support. Can't we say that that is an area likely to stop the market? We'll see if it does. We're coming up on the tail end of the classroom, guys. Does anyone have a question that I can help you with before we call it a day? I think we had a lot of great lessons. Don't predict. Remember, what do the indicators say? The last rule? The last rule says, rule number 3 of a high probability trend trade simply states that when rules 1 and 2 are met, oh, the last thing I said, it's just termination conditions, RJ. So what I was saying, if price reaches an area and all of the trigger lines are above that area of support, this becomes an area likely to stop the market. It's the same way that we identify termination conditions. Price reaches support, every trigger line's above, support is likely to stop the market. Price reaches support, every trigger line remains above, support is likely to stop the market. So you can incorporate that and use that as you're reading your 13-2 chart. Do I want to take a pullback to 4,026? Well, I've got a strong trending market. All of my trigger lines are above it. It's right inside an area. It's an area right inside of favorable large triggers. I'll take that medium probability trade all day long because of the advantages my chart reading provides. Rinse and repeat. Missed it by 2 ticks. Yeah, they didn't give it up the way we wanted them to. But do you see how you can go through that process? My rules for termination conditions say that this area is likely to hold and everything is up. This area is likely to hold and everything is up. I can deduce that I've got some advantages in place. And if I enter the market here at 26, the market's likely to continue up with everything going up. And then as I get back to the trouble spot, I would go to a zero loss level, and it can either continue up or it can take me out break even. And this is probably where I would take the money. Guys, John's going to go eat lunch. I'm going to go eat some lunch. John may be around trading this afternoon. If he is, he'll be in the room. He'll be available. If you need tech help, get with Jason. If you are just ready, you know what? Demo is awesome, but I'm committed 100%. Call your salesperson. They'll make that happen for you. Get that skin in the game, right? You know it works. We've watched it work all day long. We watch Nexgen users use it all the time. You know the education's here. Guys, commit. Make that commitment. Bobby T had an amazing time. We played in northern Sacramento. It was crazy. 50, 60-foot trees, absolutely uprooted, laying on their side on the course all over the place. Sacramento got hit. Shot a 94. Which is pretty much average for me. That's about where I typically sit. John did a lot of work with me on my driver, still trying to put that together. Just not consistent where I want to be just yet. But I'm getting there. Clear termination condition. You let the smalls get above, kind of jumped in a little bit, made a mistake, and then you wait for that pullback. Take advantage and get up to that area off the good bottom. Taking the first shot momentum style. Claire, nice job. Guys, I hope everybody has an amazing afternoon. I will see you tomorrow morning at 9 a.m. Tomorrow's broadcast comes from Oregon, so almost to the destination. Getting close. Excited to get close. Excited to start trading full time again. You guys have an awesome afternoon. Take pictures of everything you do. Post them in the classroom. I'll be excited to see you guys at 9 a.m. tomorrow morning so we can do this again and keep moving in the right direction together. Be good, everybody. I will see you tomorrow.